The market crashed. Now what? In this video, I'm going to be breaking down how much some of the leading tech names that I follow have dropped off of their 52-week high in percentage terms, as you can see right there. And I'll also be tying back to the crash of 2020 using Tesla as a proxy for the last time we had a market crash of this magnitude, which was pretty much 12 months ago. So of course, I do not have all the answers, but I hope this video can guide some thought and discussion around where the market could be headed, how long a potential recovery from these levels could take, and ultimately to provide context for this most recent drop. Let's go. So the crash. So here's the chart I was talking about. I'll just read down the list. Lemonade, a stock that I follow, down 57.5% off of its all-time high. Ethereum, not necessarily a stock, it's down 56%. The Grayscale fund, that is. Palantir, down 55%. CRISPR, down another 55%. NEO, down 52%. Zoom, down 47%. Peloton, down 45%. Beyond, down 43%, Tesla down 40%, GBTC down 35%, Spotify down 33%, Square down 32%, and Shopify also down 32%. This is just a general assortment of stocks, not necessarily ones that I all own, but ones that I'm following, and as you can see, the decreases are pretty substantial. This sell-off has most impacted the highly valued growth names, as you can see from this chart, with even Tesla, which will be a focus of this video, down 40% from its all-time high of $900 down to a low on March 5th, which is what I'm comparing all these to, at $539.49. So part of the problem and the reason these growth stocks specifically are selling off so much is that some of these all-time highs were really crazy. We got Lemonade going all the way up to $188, really nothing fundamental driving that other than a lot of excitement, speculation, as we've seen really over the last few months with SPACs and even more recent IPOs. We've got Palantir. Palantir just took off one day all of a sudden to $45. Really was a pump and a dump up there. Of course, I believe in the company, but seeing it at $45 was insane because it was not backed by any fundamental change from the business, any news that was really driving it, other than hype, at least, is what I could say. So, of course, we have seen this downward correction. Tesla, for instance, has lost hundreds of billions of dollars in market cap, and that is what we are here to talk about today. So as I said, I want to use Tesla as a proxy. This was Tesla's 2020 crash. And again, if you weren't investing at the time, just know that as a result of the pandemic, February, March, and April were very, very rough for the stock market. As you can see from this chart, Tesla, of course, is a headline name when it comes to technology and growth investing. It is also very volatile, much more so than Apple, which is stable by comparison. But here we are with Tesla, of course, had that big run up after pretty much the Cybertruck event. So here we have Tesla at $75 post split, and then the run up all the way to $175 post split. This was on the back of a very strong Q4, a lot of positive analyst coverage, some good initiation notes, bullish calls from investors, a spike there, and a rebound to what were all-time highs at that point. And then the market started tanking, circuit breaker after circuit breaker. Tesla wiped out all its gains pretty much, down to $75 post-split, which was around $350 or so pre-split, down from $900 at the time. And then we had a sharp rebound, drop off, and just a strong recovery. Of course, this is not the same situation we are in as it was 1 year ago. 1 year ago was completely different. There was so much uncertainty, which is what led so much money to be getting pulled out of the market. And remember, Tesla at this time was around a $50 billion company, maybe 100 up there at the peak or more. I didn't run the math on that, but they were much smaller than they are today, and I just wanted to provide that context. But we did have the very strong rebound. You'll see only a few months. This is February here, this is March, and then April, May, and June. It only took a few months for that rebound to occur and put Tesla back at all-time highs. So again, a completely different scenario, but if I switch us on over to the Q1 2021 chart, this would look pretty familiar from the previous slide. Dropping off, really no support and we've really not seen any substantial support coming off of that $900 all-time high, falling down below $600. This run-up, of course, from November, December, and January was driven by the S&P 500 inclusion, big institutions buying in. There it is, you'll see that massive buying volume right there is when they got included. And of course, Tesla stock is giving some of that back, even though I am still very bullish and they have so much in the pipeline. I think it is totally natural for them to give some back. I was buying under $800 a share, and then it has just been falling ever since. 800 down to 750, 700, 650, and most recently $600 per share. So if you ask me, I'd say we've reached a critical point for Tesla stock. I do not see it going to $500 per share. Of course, you could make the point that this was only driven by the S&P 500 inclusion, and we do not have any support lines yet proven, but I do think, regardless of the macro environment, that Tesla would get a nice boost from institutional buying and institutions actually saying Tesla is at such cheap prices, we are not going to pass this up, we are going to take a stand and buy back in. That is, if they have already sold. So moving along to, this is the pretty much 2019 to 2020 chart. And if you look, this is July 2019, 2020 starts here, and then this is November of 2020. So Tesla down here, and then it had its very nice positive news cycle, and then there's falling off because of the pandemic, recovery, and you'll see it did only take a few months to get back to the all-time highs. This is the parallel I'm trying to draw here. How long could it hypothetically take us to recover from this most recent drop? 40% off of Tesla's share price in this scenario, 50 to 60% for other stocks, and I just wanted to draw this parallel with Tesla, and I've already said it, drop off, recovery, and then this is Tesla specific news, but market exuberance in general, that drop is really just a speck on this chart, even looking at 2020 as a whole. This does not mean that 2021 is going to be a horrendous year for the stock market. There is much more yet to play out, and we're just going to have to see what happens in the near term as a way to gauge how stocks can rebound in the next 3 to 6 months, because I wouldn't be surprised if they do recover to previous all-time highs, as you're seeing in mid-2020. And last chart here, just to put it in perspective, once again, that is the pandemic crash and all of the strength we've seen since then. And here's the most recent 40% decline from 900 to 600. Really just goes to show you how much Tesla has risen, how much the other growth stocks have followed alongside Tesla, and how this is really just a natural sell-off. There is a lot of panic and there is a lot of fear, but as long-term investors, that is not necessarily something to be worried about. It could be, on the other hand, a buying opportunity if you deem it financially responsible. So I wouldn't be surprised if Tesla catches a bid next week and we see a little bit of a recovery. That doesn't mean this is over though. Tesla could fall further. I am certainly not the person to say. There are so many factors involved, but this is not the end of Tesla. This is not the end of the stock market, and this is certainly not the end of high growth, innovative companies, Tesla, Palantir, and the like. This is a speed bump in the road, and genuinely, I'm glad it is happening. It's a great time to buy at a discount. I'm not advising you to do so, just sharing my opinions. So I'd love to hear your thoughts in the comments below. Is Tesla a good proxy for the technology and growth sectors of the stock market? Of course, we've seen Palantir really struggling, falling down to $20.18 per share. A lot of other stocks struggling. Unfortunately, I do not have much more buying power left, but I would be eating up shares at these prices if I did. So again, in your opinion, is this most recent crash reminiscent of the one from early Q1 in 2020? I'd love to hear your thoughts. Until next time.